Can you make money in a falling market? And if so, how? That's what we're going to talk about in today's Coffee with Markus. Welcome to Coffee with Markus. Yesterday, the markets dropped like a rock. I'm recording this on, February 6th. And yesterday, the Dow plunged more than 1,000 points, 1,167 points to be exact. Can you make money in such a market environment? That's what we're going to talk about today. First of all, this weekend, we had our 3-day live trading summit in Phoenix, and it was amazing. We had a great time. The way how we are doing our live trading summits is we are teaching, or I'm teaching, everything that you need to know about trading on Saturday, on Sunday, and then on Monday, we are trading live. So let's take a look at the markets here really quick, and then also I want to show you what we did on that day when the markets dropped like a rock. So I want to go here to the chart of the Dow Jones Industrial, and as you can see today we're bouncing a little bit back. Yes, today we're actually up more than 2%, almost 600 points here in the markets. So you see the Dow has been going up for a long time, and now it started crashing. In fact, the S&P 500 now turned negative for the year as I'm recording this. Again, today we see a slight bounce back, and that's probably due to the plunge protection team. Okay, perfect. It's not easy to operate this camera here. Anyhow, so what did we do yesterday? I want to talk about the 3 ways. Let me just come back on the camera here. There we go. I want to talk about the 3 ways how you can take advantage of a market that is falling. First of all, every time the market is falling, there will be still individual stocks that are going up. We'll take a look at one of those in just a moment. But another way how you can take advantage of a market that is falling is by selling short. This means that you're selling stocks and you're then buying them back later. So that is one way to do this. And this is actually what we did yesterday. So while the markets were falling during our live trading, we were selling MYGN and TECK. These were 2 stocks that we identified with the PowerX analyzer. And as you can see here on the left, this is where it shows that we made money. So when we are doing these live trading events, we're trading a $10,000 account. Actually, there's a little bit more in this account, but we are pretending it's a $10,000 account. So this is why we entered these 2 positions. And you see overall yesterday, our profit was $498 for the day. So that's almost 5% based on a $10,000 account. So selling short is one way to do this. I'm going to come back here on the camera really quick. Now, if you have a retirement account, or depending on your broker, if you do not have a margin account, you might not be able to sell short. So what do you do then? Well, the easiest way to do it then is trading options. And when you're betting on a falling market, what you're looking for is buying puts. And that's another strategy that we pursued yesterday. So we did buy puts. Let's go back here to the screen, take a look at the positions that we had. So there's 2 puts. One of them we already entered last week, and the other one we did enter yesterday. It is the put for TECK. You see, it is the March 2016, March 16th, 2018. 29 puts, and you see we only traded 1 option, and this was up a nice $58 yesterday. As the market plummeted, we were making money. So what is another way that you can take advantage of a falling market? Let's go back to the chart. So here you see the Dow Jones, and they are so-called inverse ETFs. What does this mean? It means that they are reversed. Let me come back to the video here really quick. Okay, so this means that they're inverse, meaning if the overall market is going up, these inverse ETFs are going down. And on the other hand, if the market is going down, they are going up. So one of these ETFs that you could buy to bet on a falling market is SDOW. Let me go back to the charts here and show you what I mean. So this is the Dow Jones, and as you can see, it was going up, 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 and then we had the drop down, and today we have a bounce back. So the quote that you want to look for is SDOW. This is an ETF that you can buy, and as you can see, while the Dow was going up, this was going down, and now in the past few days, as the Dow was plummeting, it was going up. Today, as the Dow Jones bounces back, it goes down. So it mirrors it in the exact opposite way. So this is how you can also play a falling market. Now let me tell you the way how you do not want to play it. So here is, let me come back to the camera. You do not want to just say, oh, it will be just fine, I'll just wait. You have heard me saying it now since October 2017. The crash is coming. We will see a correction in the market. And believe me, the correction in the market will be at least 20%. I personally think it might be closer to 30 or maybe even 40%. Now, if you look back in history, you'll see that every 4 to 5 years, we have such a market correction. Now, when this is coming, it might take years for it to recover. Think back of 2002, the crash in 2002, or the crash in 2008. It took years to recover. And for me, the worst approach that you can take is say, oh, that's just a normal correction. Let's just wait until it comes back. It takes way too long. There is a possibility to make money in a market that is going down. And this is why I believe everybody should learn how to actively trade. Because when you do this, as you have seen, while the market was crashing yesterday, on a $10,000 account, we were up 5%. Now again, this is unrealized profits. We haven't taken any profits because we like to hold the positions for 5 to 20 days. But that is the difference between investing and trading. As traders, we're taking advantage of short trends in the market. And it doesn't matter whether these trends in the market are to the upside or the downside. When they're lasting for a few days, that's exactly what we are looking for. And that's when you can trade stocks, when you can trade options, or you can even trade inverse ETFs. All this is possible. The wonderful thing about trading is you're no longer at the mercy of the markets. You don't care what the overall markets are doing. You don't care whether it's going up, down, or sideways. As long as it is moving, as traders, we're happy. As traders, we love volatility. As an investor, you hate volatility. One of the tools that we use to analyze which are the best stocks and options to trade is our PowerX analyzer, because I get this question all the time. How do you know what stocks to trade or what options to trade, and how do you know when to trade them? And this is where we have our PowerX strategy, and we can go back to the charts and I can show it to you really quick if you're interested. So let's do this. So back to the charts. What we do with our PowerX strategy, we look at 3 indicators. Here are the 3 indicators. We're looking at the RSI, we are looking at the slow stochastics, and we are looking at the MACD. As long as they are, as the RSI is above 50 and the stochastics D is above 50, and the MACD is above its signal line, this means that we have bullish market conditions. On the other hand, if the RSI is below 50 and the stochastics is below 50 and the MACD, it's below its signal line, we have bearish market conditions. So let's take a look at the Dow Jones right now. Even though we see a bounce back today, we still have bearish market conditions based on the indicators. And this is where really I don't care what the talking heads on TV are saying, whether they're saying, oh my gosh, we're bouncing back right now. I see that we still have bearish market conditions. The RSI is at 33, so it is below 50. You'll also see that the stochastics D, the slow stochastics, is below 50. Right now it's at 28. This is indicating bearish, and you see that the MACD, which is the purple line, is below the orange line. So all three indicators are telling us we're still in bearish market conditions, even though today we saw a quick bounce back. Let's take a look at the E-mini S&P here, or at the S&P, and we see exactly the same thing. Still bearish market conditions, and yesterday when we had this massive plunge, the S&P turned negative for the year. So this means that all the gains that we had this year in January were wiped out in just a matter of few days. And this is why I love to play the market to the short side when it is falling, because a market is typically falling twice as fast as it goes up. Look at this. Take a look at the chart again. So we go back here to the chart where you see we're going up, 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 up. You see how we are grinding up, and then boom, we are crashing down. And it doesn't matter whether you're looking here at the S&P, the Dow, or yes, absolutely, I know cryptocurrencies, we're talking about this all the time. Let's take a look at the year-long chart of the cryptocurrencies, and you see how it took them a while to grind up higher, higher, higher. Here we're looking at Bitcoin, and then boom, it's crashing really quickly. And that's why I like to trade the markets both ways. So now you know how you can take advantage of a market that is falling. It doesn't matter. For a trader like us, it doesn't matter whether the market is going up or down. As long as it is moving, we can take advantage of this. So this is what I wanted to tell you today. Don't be afraid of market plunges. If they happen, there are ways to take advantage of it. And I want you to know about these, and I want you to learn about these, and then I want you to use it so that you can make money no matter what the overall market does. Hope that helps, and thanks again for everybody who joined us here this weekend at our Rockwell Live Bootcamp. It was amazing. We're so excited. I love talking to traders. We had a fantastic time, and I hope that you can join us in one of the upcoming boot camps or the Rockwell Trading live sessions that we do all over the country. The next one is happening in Orlando in just a few weeks. We will be in Orlando. I'm very excited about this. I will post a link to this here right underneath the video. So if you're interested, check it out. Come and see us, and looking forward to teaching you more on how to trade the markets. Take care.